This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. You know, leadership matters at Hedgeye. So again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probabilities. It's not about picking stocks. It's about picking the right portfolio.
Real pros that are being coached at the highest level, when they on their primary screen, they don't just have look what U.S. equity FOMO futures did. I mean, they went up like full percent. Now they're up 0.5%. I mean, that is Moab. That is the mother of all bubble behaviors. Put 2 B's on the end of it. Hashtag it too. It's when a real pro looks at his or her risk management screen, they have U.S. credit default swaps. They have bank credit default swaps. They have high yield spreads. They have copper. They have yields. They have that. I don't want to like take everyone down a level. I just want to make sure that that this is the game. You do not get into a fighter jet and look at one gauge, like just the fuel.
I think there's sort of this, widening disconnect, and you kind of alluded to it, but this widening disconnect between clearly what's being signaled by and what's going on in the fixed income markets and what's happening in the equity markets, and just this sort of willful suspension of disbelief, right? Where, and it's not like we haven't seen it before, right? I mean, if you go back, to 2007 as an example, right, where you've been getting signals loud and clear from the fixed income market, really all through the course of 2007. But it wasn't until, I believe, right around Halloween of 07 that the S&P 500 peaked. Right. So, all the way up until that point, it seemed like equities were still a good place to be and a safe spot. Meanwhile, the fixed income markets were flashing signs, very loud and clear for a long time leading up to that was, in fact, not the case. And so I think, a lot of the questions we get sort of revolve around, some aspect of that. It's kind of like, what is it that, and I guess the question I'm always intrigued by is really the question of, what are other people asking? So, it's kind of like just this sort of general feeler for, the sort of institutional sentiment dynamics that are out there. What are the talking points? What are the sort of narratives that people are, glomming onto in that moment? And I think that's partly at least a byproduct of the fact that so many funds are kind of forced, even the longer term ones, into this kind of short termism, just getting all jazzed up about a single data point.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.